Hey everybody, welcome back. Well, another day, another follow through to the downside. We're going to clean this up and talk about it. What I have in here just to point out where we're heading is just a very simple 9 EMA to start. And we can just see real clear right here that that direction is already starting to point down. And if we just kind of take a look since November 2nd, you really haven't had anything like that in here. We've been talking about that we've been looking weak for some time, and it's getting a little bit worse, isn't it? Now let's just put the most simplest of indicators in there. And really all we're looking at is the following. We're just looking at the fact that we closed below the 22. I use a 12, a 22, a 55. You should use what you're comfortable with. We have a ton to get through, and we're going to do it in really quick time so that you can get up to speed for tomorrow. But look at where we are in the RSI. Look at how we came across. Let's just do this really quickly and make this invisible so that it doesn't bother me. And again, I thank you so much for telling me don't worry about the editing, just get to it. You can see the divergence right here, and we've been talking about this for a couple days now, but it looks like it's finally coming home to roost. You can kind of see how you could make the higher high. This determines magnitude of the move, so it does kind of make sense, right, if it can't get up there. And that's exactly what we're seeing. So this is what we've seen, and now we can see very clearly that you broke. Even if you took a second and you just did the simplest of things and just clone that and just drop it right in here, that's pretty obvious too, isn't it? So you came down, retested, held there, broke the next day. It's not ideal by any stretch of the imagination, but that's where we're at. Now the question is, if we clean all this off, and then after we clean all this off, we go here, and you can see that we need to hold this level pretty clearly. I don't know that you're going to hold it. I really don't. Now, I didn't see what I wanted to see today, where we saw some buying in some sectors, but you didn't really see that. I guess the right way to say it is just flush. We didn't really have that. You didn't have the scare, you didn't have the fear. You just didn't have that like oomph to the downside. And maybe you should have had that today. And instead you're building on the VIX, and the VIX is just getting stronger and stronger. But I don't want to go off too much on a tangent here just yet. What I want to do is I want to just focus on, let's clean all this off and then we'll start over. You're right on that 4%. You can see how you're lifting. People say the dollar's doing it. Well, the dollar was actually down on the day from the open. So the dollar really did not contribute to anything today. What really did it was the bond market. And we can show this very, very obvious, but let's just do it right now. Just go to a plain chart and we'll drop this down, reset it, get rid of the RSI, pull that back down here for a minute, get rid of the line. And you know what we'll do? We'll just do a very simple line chart, because this will be the clearest indication of how you can do this and how you should have done this today, just to kind of understand what was going on out there. And what you want to do is you're going to mark key levels here for a minute, right? So here's 10 o'clock where that economic data was released. Okay, you had a bunch of data come out today. We had jobs come out, right? And you had some other data before 9:45, but you can see the peaks here, 9:45, 10 o'clock. And what you're looking at, that economic data, and then from that economic data, what happened to the market, right? You also have that movement at 8:30, or 8:15 actually, with ADP, non-farm payrolls. Everyone thinks that that is a great thing to use to come into tomorrow with. Understand ADP data was up today. The biggest misnomer is thinking that that's what non-farm payrolls is going to do. ADP data just uses ADP data. The average ADP customer has 30 employees. That's all they're doing. They're doing those smaller businesses. They're not doing the larger businesses. Big difference. What happened here at 11:30, where you can see that that was pretty much the last low yield on the bond market. And why was this the low yield on the bond market? And why did it change what happened here? This is where you had the 4-week and 8-week auction. Pre-market live today, we went through this in the public video. Hammered it last night in last night's video. You need to start watching the auctions. So if you take these levels right here and you just do the most simplest of things, put the SPY in, put the Q in, put IWM in, and take a step back. And then just look at that level, and do you notice anything? That was the high on every single index at 11:30. Now, if you knew that, it provided a really good opportunity like we had. What we were focused on was when we saw this, that was pretty much it. You knew that the high was there. So then you could just overlay this with just, again, the most simplest of things, just using a line chart. And you can go look at these big names and go, well, what are the big names doing? Well, here's NVIDIA on the day. Well, where's the high? Well, it just happens to be right around 11:30. It's not really rocket science, guys. So if you understand the economic data and you look at when it's supposed to come out, you can really give yourself a huge edge over everybody else. Drop this to 4 o'clock today, and then it will be, quote, as people like to say, absolutely glaring. That should be about as obvious as you can see what caused the data today. You can see when the good data hit at 9:45, then at 10 o'clock, and then you can see what happened with the bond market. They're not buying bonds. They don't believe that there's a hurry going into January anymore. Matter of fact, if you take a look at the CME Fed tool, it's changed drastically. Now, I'm going to leave this up here so that you can see it. Right here, you can see CME Group Fed tool. Let's make that a little darker. And that's really a CME group. And it's just interest rates. And what you're basically typing in is Fed Watch tool. This is free. January 31st, you can tell you what everybody's looking for. There's a 93% chance they leave rates alone because that's the current target price, and that's where you're at. Let's make these disappear. So that's what you want to focus on. Then what would be next that we would have to pay attention to? 6.7%. Well, is that good or bad? Well, I guess that depends on your perspective. If you came in on December 4th and you thought there was a 12% chance, see how this goes back 1 month, 12% chance, then a week ago we had something called the Fed meeting. And then it became clear that they were very, in my opinion, getting dovish. So this spiked to 16%. Well, 1 week from then, on the 3rd, now you're at 9%. You're almost cut in half. And now today you're at 6.7. So they're looking at the ADP data, they're looking at the other data, and they're saying that there's not a chance anymore really in January. I still think there is a fairly decent chance, way more than 6%, that they do cut rates. Doesn't matter what I think, they're going to do what they do, right? I can have an opinion, but that's not how we make money. So what does that mean? It means that they are not in a hurry to buy bonds. If you're not in a hurry to buy bonds, what does that mean? That means that yield has to go higher in order to attract people. And if you're going to buy a 4 and 8 week bond and you're going to do that going into January 31st, well, you might want to wait. And that's exactly what's happening. Now, if you go out a little further, you can just see that they are still predicting tons and tons of cuts. That has not really changed at all. The only thing that you might see is if you go out a little further, like let's say you go out to June, you might notice the obvious stuff where this was 6% that you were going to get to 420, 450. Now it's 3. You had a 56% chance of getting the 450, 475. Now you're at 46. 33 did spike, right? But you went the other way. So there's a really good chance that you're at least going to be down 50 basis points by then, right? And there's more than a 10% chance now that you're going to be only 25 basis points. And there was 0% chance you were going to be here. And now there's a 0.6% chance that they don't raise rates by then. This is a great little tool. And what it will do is it'll tell you why the market's doing what it's doing. It's a great macro tool. I'm not going to break out the stool because of time stake, but it's a really great macro tool. It's definitely something that I would pay attention to and kind of go from there. Now, again, these little ways that I look at the sectors relative to one another, I would really start trying to do stuff like that. It makes a huge difference. One of the things that I key up a lot and I look at a lot, and I would suggest that you have something like this as well. I have sectors and then sector line. So sector line is just going to be the majority of the sectors, right? Like the big dogs, and then sector line is pretty much everything. But I can go to 24 now and go, okay, where are they positioning money? And we can go and see that XLE is the best performing of the year. XLP, I've got that in there twice. That's a little exhausting, isn't it? So just go find out where that is and then just go, yep, boop, got rid of one right there, boom. So now you have XLF, XBI. So you can start seeing where's the money going? Where's the money not going? Well, it's certainly not going in the semis. It's not going in the software. It's not going in the tech. And all of a sudden they hate regionals for some reason. Real estate's not really doing so great, but that's starting to turn around today. You can literally draw your demarcation line from the SPY and state where you are. You can also just throw in others right in here. So let's say you want to look at the NASDAQ. Let's say you want to look at what the crypto names are doing or IPO names are doing. Doesn't matter. You just throw whatever you want in there. And you can see that the IPO names are here. And you just kind of go from there and you can kind of play with it a little bit. Here's Block. Block's doing better than the Qs. But if you just take the SPY as your demarcation line and you go to the 24th or 2024, you can just see that XLE, XLP, XBI, XLF, XLC are the only ones that are outperforming the S&P. So if you were a betting person, which you are, if you're watching this, where should your money go? Your investments, if you're a trader, should probably be in this quadrant and not in this quadrant. See how easy that is to make that decision? And some people say, well, I think that this is going to turn around. Well, you can think anything you want. It's not. So it doesn't really matter. Now you can break it down. I don't mean to be like that cruel about it, but no one cares what we think, right? All that matters is, do we make money? So now if we go to the day and look at the 4th, you can go, okay, well, Block's moving again, XBI's moving again. Well, Block's moving again because they expect that this time they're really, really, really going to get an ETF. This time for sure, it's going to get that, and the market's really going to go higher, right? Okay, we'll see what happens. But you get where I'm going with this, and are they getting out of energy? Is that something we should think about? Is everything fixed? All of a sudden the Red Sea's open, everything's good, all the straits are operating fine? Well, I guess it depends on who you ask, right? Depending upon who you ask and what day it is. But for me, this is a huge tool and it's something that you should pay attention to. If we take a look at that, why I'm on that topic, besides being facetious, I should talk about how you can benefit from it. So I don't believe for a moment that this is over, that these tankers are all of a sudden, everything's warm and fuzzy and you're going to be able to sell right through these smooth, A matter of fact, I saw a really good piece today. I'm going to pull it up. So this was something I went over in our private video this morning, and we actually were able to benefit from it and do some trades off of it. But what I was talking about, this is a piece out of Goldman. And no, this is not inside information. This is called research. I would strongly suggest that you start trying to develop access to fundamental research and start learning about what's really going on out there. You can do exceptionally well if you start understanding how to connect all the dots. See total, northbound, southbound. I'm not going to bore you with that, but we're just going to look at this total line. And we're going to look at oil flows through this strait. I am not going to butcher that name. So you can see oil flows. What do you take away from this graph? Okay, this is how much was moving. This is how much is not moving. Okay, so it's not rocket science, guys. We were at a 6, we're at a 3. Okay, it's cut in half. So we're not really aware. I'm just going to be candid about this. I don't think they're really telling us the damage that's going on over there and the issue. And to me, this is substantial. So what that's telling me is that the straits have issues. We saw Maersk pull back again for the second time. Tankers broke out today, but they provided a nice day trade if you want to take it. This reversal, this would bother me a little bit about how we're breaking out of these areas, and then all of a sudden we're at lows of the day. But these tankers are thin and they're very temperamental, so you want to pay attention to that. The one name that's not going to change because all of a sudden those dry bulk shippers are just not going to go back. This is something that we've been, again, in the community trading and doing exceptionally well with. We started, I guess it was around here for the first time. Some people actually were fortunate and got in here. We weren't involved until this happened. And this is when Maersk came out and said, don't worry, guys, everything's fine. We're going to come back. And then they came back and said, just kidding. It's really bad out there. And then we started spiking up again, came back, retested. And now you're having these runaway breakouts. See these gaps in the chart? Okay. The ZIM has roots other people don't have. If you want to come from Southeast Asia and you want to go right into Baltimore, this is it. So there are routes that only certain shippers have. I remember this from back when this thing went public. I started really digging into it. But look at these gaps. These are actually called rising windows. I don't know if they're going to put that there on the system as rising windows. Let's take a look at that and see if they are. They have a really cool feature here where you can hit this button and it'll tell you what you're dealing with. To them, technically, it's not a rising window, or I don't have rising windows set up. No, I have them set up right here. They're calling that one a rising window. Nevertheless, to me, when I have these kinds of gaps in the chart, I look at them as rising windows, and you can see what's happening. It doesn't really matter if I call it a blueberry, does it? You can see what's happening and that we're lifting higher. So I don't see how you're not getting to 15 and a half. Look at the volume as it's coming back in. Yep. It's a big deal. It's a really big deal. And you can always go and take a look here and go look at BDI, which is the Baltic Dry Index. And what this will tell you is this will tell you what it costs to ship something. Now, I have a really hard time believing that shipping costs are actually dropping, right? And that they're leveling off. And I would expect that when the next batch comes out, this was Tuesday, January 2nd, I would expect that to be a little bit higher. But for our purposes, ZIM, and taking a look at that, I think this needs to be on your radar. I really do. I definitely think it's one of these names that you need to pay attention to. I certainly am paying attention to it and would suggest that you pay attention to these shippers as well. For crude oil, coming down, you're going to want to watch this. Non-farm payrolls, too, I'm going to bring this up. Tomorrow, 8:30, look at the number. The number is the number. If it's higher, remember what they did last time where they dug into the number, pulled it apart, and then found out that it was basically government jobs, okay, so, or secondary or tertiary jobs. So you're going to want to really watch the initial number and watch the initial reaction more than usual. But crude oil, I want to focus on this for a moment. Just, I don't know how long we're going to stay here. I mean, are things going to be that weak that we're not going to be able to get through that 75? You saw this with natural gas today, too. They're coming out and saying that they're expecting it to be colder than expected. And you're seeing UNG lift, and you're watching Boyle lift as well, right? That had another decent day after it was falling off a cliff back here, but you're starting to turn there as well. So we are seeing signs of that. All right. Now, a couple things that I think are really pertinent to go over. Non-farm payrolls is tomorrow. It is 8:30. It will move the market. We will be live for it, and then we'll go through it line by line. MBLY, we should just talk about the movers on the day, and you can see how this is going, right? MBLY. And they came out and said that our earnings are going to be a dumpster fire. People didn't care, and they bought the stock anyway. I'd be real careful with these kinds of names right now until this settles down. You can see how the market's turning. You can see that you're not responding the same way. I hope you can see that you're not responding the same way. Okay, you're starting to see these stocks above the 200-day moving average. They're finally starting to get weaker after hitting 75. You always want to watch these, and you want to watch how they're acting. We were up here at 90. Remember when we talked about this at 50, how you need to be careful when you get to 90, you start to seeing us roll over. So the bond auctions are not going well. Non-farm payrolls is tomorrow. That could rally the bond market. Take your lead from the 10-year tomorrow. That's what you want to take your lead from. You want to focus on the 10-year. Leading sector today was XBI. Leading names, CYTK. I guess you guys are sick of hearing me talk about this one, but it's up after hours, actually hit 90. So again, this is something we've been playing with in the community for some time. XLV continues to push. I'm not really chasing those. I thought it was very interesting that the third best performing sector out of all the major sectors, and I consider regional banks a major sector, I thought it was really interesting that after biotech and healthcare, that it was regional banks after yesterday. That lets me know that this was probably retail selling of DPST. You remember we went over smart money, dumb money. Make sure you watch Saturday's video because we're going to get really into smart money, dumb money, what's going on there. XLF, you can see how you're hanging in here. Here's what I don't like that's happening. Right, here's what I don't like. I don't like when you're breaking out and hitting highs and then you can't stay up 50% of the bar. So one of the litmus tests I always do is I take these breakouts and then I measure them from here. And I want to see where I'm at on that 50% line, that 50% demarcation. If I can't stay above that, that's definitely something that I want to pay attention to. So that's certainly something I want to pay attention to. I'm going to be remiss if I don't talk about Bitcoin, but I think LABU makes more sense to talk about. You're forming a pendant here. Breaks out, pulls back, undercut, rallies, undercuts, rallies, right? All they're doing is trapping people. And now you're the best performing sector today. Makes a lot of sense, guys. So should we be looking and running into this? Couldn't break the 12. Let's take a look at XBI. Okay, so there's XBI. All right, so let's take that for a moment and realize that you can't break the 12. How about the SOX? Okay, can't get above the 22. Has not gotten above the 22 yet. Has the software gotten above the 22? So if you're looking at trading tomorrow, what sector do you think you should look at trading out of those three? Which one's the strongest? Or are you going to go out there and predict that this one's going to move? You can either predict or you could just analyze like we just did and trade what is actually happening and make money. The other one, you could trade your ego, right? One will work, one will not, just FYI. All right, so then we got that. We know which of those three sectors we're supposed to look at. We should be talking about things like this. I'm going to clean this out in a moment, but this provided a really nice short at the end of the day. I think people probably caught this. I mean, it just looks like an absolute dumpster fire. But you have this really weird pattern here, and I just want to go over this, and I'm going to drop this to plain, move this to a 15, and let's bring this down. To me, this is a flagpole, and then I'm forming here, and now I'm breaking. Forget that 55, I don't look at it. But you see how you're cracking here? So you're going to really want to watch this tomorrow. You're really going to want to pay attention to it. It's setting up to really, truly crack. Like, I think you're heading to 231. I don't know if you're going to do it tomorrow, but I'm betting that you are. I have a short-term bet on. I already took some profit on the short. The idea that you're going to remotely just get above this, the idea that all of a sudden that you're going to get really positive news out of there as soon as people are short a bunch of Mara. I mean, same superheated, guys. How many times are you going to fall for the banana in the tailpipe? You know, this time we're really going to get an ETF. So you're going to really want to watch this, but are you going to get over that level or not? That's your demarcation line. Okay. Can you get over it and make a higher high? Period. This is the entire trade. If you can't get over this and make a higher high, forget getting over it because you already did that. Get over it, make a higher high, and go from there. As far as Mara, I bought puts. Maybe it works, maybe it doesn't, but when I get two bars like this and then you gap down, you're due for a reversal. You're due for a snapback, and that's what you got. But there's no real base here anymore. You came to the 22, maybe you hold, maybe you don't, but you're going to need something here. And I don't know that short covering and panic is going to be enough. I'm just not sure on that. If you take a look at these bars like coin, that's not really enough. If you look at that, that's just going to remotely keep me in there. And look how you couldn't break the 22 there. So I would watch this really closely. The one thing I would say that I was very happy about today is that NVIDIA did not take out lows. AMD did not take out lows. They're trying to defend very specific areas, right? ARM did not take out lows. I like the fact that this happened, and that is definitely something that we could build on. That's it.